David, I will start it off with you. We've got gold hitting an all-time high. We've got the 10-year yield at 0.57%. We've got the dollar index at 18-month lows, S&P 500, 5% off of record highs. What do you make of the market action right now?
So, I think it's important to take a step back and realize that, one, things have moved pretty far, pretty fast. Two, a lot of this has been driven by the policy response, and there are now some questions that are coming into play around what continued policy supports are going to look like going forward. And three, you do have concern in the technology sector and amongst the big growers with respect to valuation. And so, I think markets pulling back here is really just more a consolidation than anything else. Arguably, what's most interesting from our vantage point is that weakness in the dollar, not only what it's doing to precious metal prices and commodity prices, but more broadly what that signals about the state of the global economy. A weaker dollar would be extremely reflationary and extremely helpful at this juncture, bringing the global economy more broadly back online. And so while it would be a bit of a headwind for parts of the U.S. market, I think broadly speaking, that could help a more broadly based recovery materialize and put the global economy on a healthy trajectory headed into 2021.
I mean, Kathy, it does look like traders are betting on further weakness in the dollar when you take a look at the CFTC positioning the latest week. And then you have Treasury yields doing what they are doing. What do you anticipate? I mean, I hate to ask this question, but how low do you think yields could go given this backdrop of continued Fed stimulus and stimulus from around the world for that matter?
Yeah. Hi, Melissa. Well, I think, for one thing, the move in gold is to a large extent a reflection of what the Fed has already done in terms of stimulus. So you've got negative real yields in the United States and very low nominal yields. And since precious metals are often financed and have a storage cost, when you reduce that cost to near zero or push it in real terms into negative territory, it enhances the value of those sorts of assets. So it's not terribly surprising that gold's been on a run to the upside here for quite some time. What does that mean for yields? Well, obviously the Fed has told us lower for longer, that they're going to keep short-term interest rates near zero for as long as it takes to get inflation back towards their goal of 2%. It looks like that's going to be a long time because we still have a tremendous amount of weakness in the economy and this deflationary headwind. But I would agree with David that a weaker dollar certainly helps the reflation story. It improves global liquidity. So it's a positive probably in the view of the Fed.